One of the biggest winners in the $1.8 billion verdict that shook up the real estate industry has been CoStar, an industry leader in CRE information, analytics, online marketplaces. CoStar Group has seen 50 quarters of double-digit growth. It's quite a remarkable story. I want to bring in Andy Florance. He's CoStar Group's founder and CEO, and the man who's been bullish on the company since his first investment in 2001. Our host here at the Barron Conference, Ron Barron. What did you say it was? 47 times?
47.3 times.
You've made 47.3 times your money.
Right. So far.
So far.
Right.
And you think you're going to make what when
a lot more.
Where can it go from here?
Well, I remember meeting with Ron first time, and we had trailing year revenues of $7 million, and I spent the meeting trying to convince him we'd get to $100 million. We're now approaching $3 billion, and I believe the next stop is $100 billion in revenue.
Did you get that?
I got that. I clocked that. Let's talk about the real estate market right now. There's a lot of questions about what's happening. I mean, we were talking about interest rates and what that's doing effectively to the real estate market. There's this lawsuit and the results of that may have a very interesting impact on your business. What do you think?
Yeah, so we're in I think there are two separate components there. We are with raising interest rates and the appreciation we've seen in the house values over the since the 09 recovery on up to basically the same climb we had before the 08 bubble. You bring in then these interest rates moving from 3 to 8.3, and affordability has dropped down to the worst it's been. The fewest number of Americans can afford the average house. We haven't seen anything. We haven't seen the market, buyers priced out like this since 1985. So it's a tough market. Volumes are way down.
And what does that mean, by the way, to your business? When volumes are down, how does that impact you?
We have about 15 different companies, and they serve different sectors, and they're all very counter-cyclical. So when one component of the market is going down, another one goes up. So for instance, we may be providing services to lenders evaluating their loan portfolios. In a down market, that goes up.
Like apartments go up when houses go down.
Right, and so apartments go up, and then you might be moving in next year into a recovery in the office market a bit, and that market goes back up. But a big part of what we do is we have about 1 billion people a year search our websites for all kinds of real estate. And when things get tough, people tend to invest a little bit more in marketing their real estate, and we're a beneficiary of that.
So, I assume two things happen. They invest more in marketing their real estate, but there's less volume of stuff.
Correct.
And I assume right now there's really less volume of stuff because people are less mobile right now.
It's down dramatically. It's 30, 40%. It's down probably 45% on the commercial side. It's down probably 30-some% on the residential side.
And that's in the U.S. What does Europe look like? Because I know you have a big business there too.
Yeah, I think this is my 5th country this week, so similar there.
Similar there.
Welcome to the United States.
Yeah.
What do you make of the lawsuit that we talked about at the top of the segment, and what it means to the real estate industry, the brokerage business writ large, and what may come as a result? Meaning, there's a lot of folks who think that the commission system, the model that we know, is effectively going to be upended by the results of this case, and then maybe antitrust regulators and others doing this more broadly around the country.
And how it impacts the other companies who are competing against us.
For sure. So we are. I think people are a little slow to grasp what's happening. We've been watching this come for about a year and a half. People didn't believe a jury would actually return a verdict that was this significant, but it's a $1.8 billion verdict, which will be trebled to about $5.4 billion, and this was just for Kansas.
Right.
So that means the rest of the United States is to come, and that could take the damages up to about $400 billion. And I have begun to hear about another theory of damages around a commingling rule in the MLSs, which could escalate it even more. So I think it's highly likely.
If you had a $400 billion penalty, I mean, you would wipe out the profits of the business for a decade or two.
the plaintiff attorneys will negotiate basically all the cash and all the borrowing power out of these major brokerage firms, MLS, take away everything. They'll try to appeal, but you have to post a bond of 10% of the damages to appeal. That'll be very difficult for a number of these companies. So there'll be a bunch of copycat cases, but at the end of the day, I believe the broker participation rule, it says that the seller must pay the buyer's broker's commission, is done. And the DOJ and FTC will probably follow this lawsuit and weigh in and say that's done. And when that's done, it's interesting. It will definitely upend and turn the market over, and there'll be some big winners and losers. Some of the brokerage firms who have judgment skin, some will have a tough time. The agents themselves, I don't think they've figured it out yet, but I did an analysis yesterday where it's clear that about 85% of real estate agents in the United States do both seller representation and buyer representation. As the buyer representation component goes away, they no longer have to split their fee with a buyer broker. Their commissions would in theory double, so they get twice the money for less work. So the agents are winners.
But unless you think the rates are going to go down, because they're going to say, I'm not paying 6% for this.
Rates will drop 150 basis points.
But you don't think that you don't think it goes from 6 to 3?
No, I think there's KB did a good analysis that I think is solid, which it will come down to about 3.5.
Okay, so if you're a real estate agent watching this morning, we're thinking about the rest of your profession.
It's good.
Professional life. You think it's actually good?
If you're a seller agent, there are about 10-15% generally less experienced agents who work with a Zillow or Realtor getting these sort of leads where you split your commission with Zillow Realtor. Those guys are going to have a really tough time because the business models that rely on selling buyer leads on Zillow and Realtor, I believe those will completely disappear and have to be, reconstituted as some completely new revenue model.
We got to run, but I just have one.
But the data that we have is unable to be copied by anyone else.
We have
collected over years.
$5 billion of investment in data over the last 10, 20 years.
Okay, last 30 seconds. Office. Everybody has thought that the office market would tank. It would take some of the regional banks with them, that this was sort of the iceberg in front of us. Is it or not?
We're in the epicenter of the pain right here at Lincoln Center. So New York is seeing the highest vacancy rates, the lowest rents it's ever seen. It would be the point where everyone thinks the world's coming to an end, and we work filing for bankruptcy. It's heavily concentrated in New York. But it's in a number of major cities. So, but it's going to recover over the next 2 to 3 years because we can see people returning back to work bit by bit, and no one's building anything. And I actually believe there'll be a supply shortage about 3-4 years out. But right now, a lot of bankruptcies.
Andy, I want to thank you for
see you soon.
Don't go anywhere. We're still going. We're still on. We're still on. We've got a lot more from the Barron Conference. Don't worry about it, including the CEO and chairman of Choice Hotels in the middle of a potential deal with Wyndham. As we head to a break, check out the futures ahead of the open. Squawk Box returns after this. Sorry.
Time now for today's Aflac Trivia Question.